Hello, Joe Pryor again. Thank you for staying with us. And this is the next group of modules that we're going to do. We're going to talk about risk. And again, anytime you put your money out, there is risk. But real estate, there's a way to avoid some high risk. So let's kind of go into that. Market volatility and economic downturns can affect the type of investment that you're in. So, for instance, we talked about the stock market a little bit, but some of the stocks that I'm in that are great companies and everything, the last 2 or 3 days, they've been extremely volatile. They've gone down. In some cases, I had a stock that was off $20 a share. It's a great company. I'm not going to go crazy, but market volatility can affect a lot of your investments. We're going to talk about this in real estate, of course. The other thing that's a risk is liquidity and cash flow challenges. So, the thing is the worst thing that you can do is get into investments where you've risked everything. In other words, you don't have any reserves behind you, don't have any liquidity whatsoever, because bad things can happen, not just in terms of the volatility of the market, but other things can happen with your property. And we're going to be going into that a little bit later. And so one of the things we're going to talk about in this class is debt. We're going to talk about reserves. We're going to talk about making sure that when we're doing all of these measurements, and any real estate investment specialist, whoever you deal with, is really telling you what you really need to be safe. Because, man, I don't want you to risk it all. I don't want anybody else to tell you to risk it all. So we're going to go into that in a little bit about how you look at these challenges and how you deal with them. One of the things that you're going to get into if you hold on to a property is property management and maintenance issues. You may live in a hurricane area. You may have something like hail damage, tornadoes. Obviously, we have a kind of an extreme situation here where the tree got uprooted. Maybe it was just high winds. But these things happen. Nothing is perfect. There is going to be things that break down in your house. There are going to be things that are going to happen in terms of weather. And so we're going in later in the class, again, we're going to be dealing with this specifically about how you take care of this and how, again, to minimize risk in this. And we'll be going into that in the property management section. But I will tell you that any really good property manager is going to do a reserve fund for you. It's going to be depending on the area you're in and what it costs to do things. It could be as little as $500, $1,000. But we're always going to have a situation where you want to take care of that tenant immediately. And in taking care of that tenant, then you're going to want to be able to say, I'm going to get somebody out there this day, or your property manager gets somebody out there this day, because the idea is to make them happy and make them stay there, have a reason to stay there. So there's always going to be a reserve fund, and we'll talk about that later. But there's big ticket items. If you have something like this, there's a few $1,000s out of pocket. If the roof is damaged, it could be $5,000, $10,000, $20,000, $40,000, depending on the type of roof it is. So we're going to be dealing with how you deal with big ticket items later, but it is something that up front you need to be aware of and really just consider. We're also in the section on property management. We're going to talk about weekend maintenance. Now, if you own a home right now, you know that sometimes on Saturday and Sunday, there's an upcharge. You're going to get charged more, but if you have a tenant in there and it's 20 degrees with 3 kids and the heat goes out and it's a Sunday, the thing is one of the risks that we're taking is they're not going to be happy if their kids are frozen. And so the good property managers, and we'll talk about that later, are the kind of people that without an upcharge can get people there on Saturday and Sunday and take care of things. The other things are pets. Pets can cause a lot of damage, cats, dogs. This is a decision that you have to make on what you're going to do, whether you're going to allow them or not, or if it's a situation where, if I do, we're going to talk to you about deposits. So these are things that you need to consider the risk in property management. Then there's tenant-related risk. I know in the case of what I sell and the property managers, if yard maintenance is not done, and if somebody calls and complains, the homeowners association does, our property managers get out there immediately and mow it. So it doesn't make it look unsightly. You don't want to upset the neighbors, especially owner occupants. So these are tenant-related risks. Paying on time, something that happens, all right? Paying on time, having late fees and getting late fees is extremely important, but sometimes it can get worse, and we'll talk about that in just a second. And then attention to damage, all right? tenants can do damage. I'll give you just a quick kind of thing that you can talk to a property manager about. Do a virtual tour of everything inside and out when they go in there, and do another one when they exit. And so if there's crayons on the wall and they say, my children didn't do it, here's the before and after, and it's taken out of the security deposit. And finally, you need to evaluate what state you're investing in and what the eviction policy is. And it can be as little as a couple of weeks in some states. It can be 6 months in other states. This is probably one of the biggest risks that you're going to face. And anytime you buy anywhere, if you're buying out of state, you need to know what the eviction laws are. Is it a landlord-friendly state, or is it a tenant-friendly state? Because 6 months of vacancy can really hurt you in a big way. It's hard to get that money back. And there can be legal and regulatory challenges also. So, zoning can affect you. If you're in a new suburb and there's empty land next to it, what is that zone for? Also zoning from the point of view of, is it in a flood zone? I don't do anything in flood zones, but it's something that if you buy an older home, you need to know if it's zoned in a flood zone, because otherwise, big insurance policy in order to cover that. Fair housing, whoever you deal with in terms of leasing a property out, fair housing is extremely important. Also protected classes, extremely important. Property tax increase laws, all right? Are you in a place where it can only go up 3% or 5%, or is it open in terms of what things can go out? These are questions that you need to ask your specialist, your realtor, whoever you deal with. What's the laws in your state? What's the laws in this particular area about that? And then there's homeowners associations. Before you ever close on a home, you need to read the covenants and restrictions. For one thing, there are some neighborhoods that restrict rentals. They're in the covenants and restrictions. They may have no more than 10% or 5%. And you don't need to buy before you know that, because they can basically say you're out of here. And so you need to know what the homeowner rules are. Homeowner associations can be your best friend, but they can also be a pain in the tuchus, and you need to know how to deal with them. You need to know what you're getting into before you purchase that home. It is a risk. And I'm seeing some blowback on short-term rental regulations in some areas of the United States. I'm seeing people trying to outlaw them, the Airbnbs, for instance. And you need to, let's say you're buying a short-term rental. You need to know up front if there is any potential problems involved in doing this, because you don't want to get left out on this. And then building codes and permits. These are other things that you need to be aware of. What is it in terms of what I need to do if something needs to be replaced? Do I have to use a licensed person on a roof or a fence or whatever it happens to be? And do I have to go with the current building codes? And what are those current building codes? But if you're going to do maintenance or replacement, these are also important things that you need to know about. Another thing where you can diversify risk, and I use Oklahoma City because this is where I'm located, but if you see the west side of Oklahoma City there and you see all those balloons, those are all different neighborhoods at one point on the west side where you could buy investment property in new construction, in new suburbs. And, what I have with investors is they don't buy everything in that Mustang neighborhood that's right there by the balloon. They don't put 4 homes in there. They'll go up to Piedmont. They'll go down to Newcastle. They'll go into different areas. And one of the ways that you can do that is diversify where you're buying. Maybe a 3-bedroom one place, a 4-bedroom, a short-term, a long-term, even to the extent that I have investors, that invest in Oklahoma, they invest in Florida, they invest in other states. And so they diversify by going outside of one state and outside of their own individual location. And so there's a lot of ways that we can talk about diversifying how you buy real estate. Now, the most important thing that you can do before you ever make a decision is what's called due diligence. Something, I have some people that are just ready to rock and roll, and I answered 3 or 4 questions. Maybe a friend has been successful with me and they've recommended me, and so they're ready to go. Another time I may get 20, 30 questions that they want to know about before they invest, and that's okay, because everybody's going to be a little bit different, but it starts with the correct value. That's number one. Am I getting what I should be getting? You know, during COVID, people were being stupid. As far as I'm concerned, they were paying 20% over the listed price. That's nuts. I'm sorry, I'm just not that way. I don't like to pay more than something is worth. I want to know what it's really worth. And so I think that's important that you establish the correct value. And what around it makes it attractive? What? Maybe it's the schools, maybe it's hospitals, maybe it's roads that allow you to get placed quickly. Maybe it's shopping, maybe it's a supermarket that's close by. Maybe it's parks, maybe it's golf courses. All sorts of things can make a particular property convenience-wise in its location and the amenities around it. The other question you always need to know is, what is the percentage of rentals? So, for instance, I have a program that I can go into a particular neighborhood and say, how many non-owner occupant properties are there? Now, I know some of them will have a P.O. box. That's the way some people operate. But I also know a lot of serious investors do a limited liability corporation, an LLC. So if I see about 15% or 20%, a lot of out-of-state addresses for investors, I'm starting to think we got a real problem here, because supply and demand is everything. If you have too much supply, your vacancy goes up, your rentals go down. You need to really know what the percentage of rentals are anywhere that you're buying. Also, what is the condition of the property? Even when I've sold new homes, I have people do inspections, because they're still built by human beings. But if you have an older home, you really need to look at some of these capital improvements and make sure they're okay. Is the roof okay? Is the central heat and air okay? Is the foundation okay? Is it cosmetically in good shape? You need to know what the condition of property is. And so we always say, get an inspection. Also, what is the history of appreciation? What is the last 5 years, for instance? Is it something that is steady? It's been kind of up and down, but in the end, it's going up because, again, we're going to get into this some more. Appreciation is huge. It's extremely important that you have appreciation for building wealth. And is it an up-to-date style? Is it something? Now, I know some people like to be close to a downtown area and historical homes, but you will find a greater percentage of people want to know that that house is up to date. Or if it's an older home, even updated nicely. So it may be built in 1982, but what's been done to it since that time to make it attractive inside and out. So these are the things, there can be more. What are the economics and demographics? Is there population growth? And this is something that a good person that you're dealing with is going to go into. And this is the real key, is building a strong support network. So in other words, and I'm going to get into this more detail. I'm a real estate specialist. I don't do anything but real estate investments. But I also have property managers everywhere that we go, and I have choices. I have insurance people that know what they're doing. In fact, the insurance people I deal with are major investors. They know how to take care of you. I look at lenders. I have lenders because I want rates that are really good, maybe even better, but I want outstanding service also, because these people will work hard for you. And if communication is good, they're going to take care of you. And then contractors. And this is a combination of the property management and me and our team, that we have a lot of contractors that can really take care of every need that you have, especially if you're buying an older property. And so you're going to find that if you're going to deal with somebody in a particular city or particular state, look for somebody that's got a turnkey operation. Look for somebody that's got all this in place so that it becomes simpler for you. And also you feel like you're really being covered and coordinated properly with the best people you can deal with. So I'm going to stop here. That's probably a little longer than I really wanted to go on that. But in this next section, we're going to talk about the type of real estate investments you can make, because there's different ways that you can go about this. And we want to talk about the specific advantages that they have. And so we're going to go into that and a whole lot more. We'll get a lot more coming, so stay tuned. Appreciate you being here.